Hey everybody, this is Ryan Mallory with the Stock Market Crash Update number 5. Been doing this for the previous 5 weeks. There's tons of other videos on my YouTube channel, but right now this is what matters the most. So I'm not going to be doing any more educational videos until we're out of this mess. Let's go ahead and jump right into the S&P 500. We had a great week when you consider the returns on the stock market. The S&P 500 up about 16% off of the very lows that were reached on Monday. It got as high as 20%. Looked like we might challenge those into the close today, but the market pulled back in the final 30 minutes. I can't blame anybody for selling in the final 30 minutes. I wouldn't want to hold a long position going into next week. Mondays have been atrocious. There's been no good feelings about holding a stock into a Monday morning. And so you saw a lot of selling, a lot of scared hands, weak hands, algos trading en masse to the downside. They were selling their shares. We got a market that finished about 88 points lower on the S&P, 900 points lower on the Dow, but overall in the week, still a nice bounce. The big question is, should we be trusting this stock market at all? I don't. I don't trust it at all. I think this is what they call a dead cat bounce. What is a dead cat bounce? I've explained it before. I'll explain it again here. It's basically where the stock market bounces because it's basically sold off so far. It's fallen so far, like a dead cat. If it falls off of a building, it'll be dead when it hits the ground, but it's going to bounce. Doesn't mean it's going to have any life to it. It's just going to go right back to the ground again and lay lifeless. Kind of like what the stock market's doing here. It's had a huge drop. It's bounced. Do you trust it? I don't. There's a lot of people jumping into the stock market for the first time. A lot of new traders. They're getting their Robinhood apps. They're putting $4,000, $5,000, $6,000 in there. It's not a lot, not for the purposes of the stock market, but it shows you the mentality that a lot of people have. They're not really scared about this market right now. They see it as an opportunity. And most people, when there's a bottom hit in the stock market, don't see it as the opportunity. They see it as Armageddon. I'm getting the heck out of town. I'm not touching the stock market anymore. That's the mentality that most people have when the bottom hits. I'm not seeing that. If you talk to almost anybody this week, they felt like that this was the bottom of the market. They were pumping money into the market. Everybody I ran into this week were saying, this is the bottom. I'm putting money in. I opened up an account with Robinhood. So yes, I think there's a lot of misplaced optimism in the stock market right now, and I'm going to show you why. Take the S&P 500. Remember this long-term chart that I talked about going back to the beginning of 2016, this big purple line here? Well, when we bounced right into it on Thursday, yesterday, and we did not break through it. Instead, we tried to retest it again today, and we saw an immediate sell-off. And we're well off of that resistance level. We have not broken through it. I don't have a lot of optimism about it when we couldn't reclaim that support level. That was a major trend line, and we're trading below it. It was a trend line off of the 2016 lows, and right now we're still below it. Now, I also talked about the 2346 level. We closed below it on Friday of last week. That was not a good sign. I told you it wasn't a good sign. However, we were also extremely oversold. So there was a good chance that we were going to see a bounce like what we saw this week in the stock market. So we were back above 2346. Does that mean all is better in the market? It's an improvement because guess what? You don't want to keep going down the whole time. That's not a good thing either. But you have to look at a bounce for what it is. More than likely, and this is just my belief, I think you're going to retest these lows from this past week. Whether we break below them, that's going to be key. If you sell off and you can hold these lows, then you have what they call as a double bottom, basically where price in two different places in time tests the same price level and doesn't break it at all and actually goes back up. It creates the foundation of a nice base that a market can begin to rally off of. However, if we break it, then all bets are off. It's just another point in the existing downtrend. You don't want that either. So here's that trend line off of the 2016 lows that we were just talking about. We tested it. Here, this is the weekly chart. We tested it and we came back down some. Like I said, I think this is a dead cat bounce. I would not put a lot of hope into this rally that you saw this week. This is what I would probably call a sucker's rally. People are going to get into it. They're going to get burned. I think ultimately we take out these lows again. Maybe we hold them. I'm not sure between the two what's going to be the likely possibility, but I think until we really know the extent of what the coronavirus is going to do to this country, and more importantly, in terms of the stock market, what it's going to do to the companies that are still shut down, that aren't being able to make any earnings, how long companies stay down, the effects on the mortgage markets, the effects on companies to be able to just open their doors again. It's hard to say that this is a bottom because we just don't know, and I don't see any sign that the news is getting better. Actually, it's kind of getting worse. So this week was all about a rally for the stimulus package. The market was pricing in the stimulus package. Pretty much done that already, okay? So if it doesn't hold, we break back below this 2346 level that I've told you before was the December lows of 2018 when we sold off hard. Then the scenario comes up for this 1800 level again. I'm not saying I necessarily want it to go to that price level. You're going to see some incredibly discounted stocks if that actually does happen. But there's not a lot of support underneath. I mentioned before there's some support in this maybe 2100 area, but it's kind of weak. It's a little bit iffy. Or if this dead cat bounce level can't hold and the 2346 level cannot hold from the December 2018 lows that I'm mentioning right here, well, I would say that the 1800 is the next logical place for price to go ahead and test. Now let's look at the Nasdaq QQQ. It represents the Nasdaq, the top 100 stocks in the Nasdaq composite. First, you have this huge support level going all the way back to March 2019. It has held it really well. I mean, we bounced off of it this week. Yeah, we broke below it intraday. However, it has held at the close. So that's a pretty solid sign there. If the market can hold it together and the Nasdaq can avoid breaking below that, maybe there is a bottom here. The S&P doesn't look as optimistic. The Nasdaq does a little bit more. The one thing that gives me pause is you have this downward trend line here, and it is held pretty much intact here over the last month and a half or so. You have these February highs. It tested it here. It tested it yesterday. It tested it again today. It can't break through this downtrend. That's a problem for the Nasdaq. It tells me that the index is still interested in putting in lower highs and lower lows. Lower high and another lower high. These are your lower lows. One here and a whole bunch right here. Now I think that we're going to test this support level here. And if the support level breaks, then we're going to have a new lower low somewhere around in this area here. There's some things to be hopeful about on the Nasdaq. I just don't think it's enough to supersede anything that we've seen on the S&P 500 or the declining trend line off of the February highs on the Nasdaq index. Now let's take a look at the VIX, and this is another problem for the stock market. The VIX isn't coming off of its highs that well. We're still at 65. It just won't break down. In the past, anytime you see a 5, 10, 15% rally, you would see the VIX get crushed. It would come straight back down. The Volatility Index could not sustain these kinds of levels in a huge bull market run. Instead, we rallied 20% on the S&P 500 at one point, and this thing's still hanging out at its recent highs. That is not a good sign, guys. Not a good sign at all. You could even say that you have a little bit of a bull flag here, acting like it wants to maybe go up into the 80s and 90s again. If it did, it would be at like a historic proportion. It would be higher than what we saw in the 2008. Now, what's a bull flag? A bull flag is basically, it looks like a flagpole. You get a straight line going up, and then you have what looks like a flag on that pole. And that's what you have right here. You can see it on the chart. It has a little bit of flag. They tend to break higher. So if the VIX keeps going higher, that means that the market's probably going lower. Now I want to go back to the S&P 500 because I want to highlight something else that's kind of bothered me a little bit. Late February, early March, you have what they call it a bear flag. Now that's just the exact opposite of a bull flag. And this bear flag was a kind of a nice little bit of a rally. It was a little bit of a haphazard rally, but nonetheless, it did bring us off of the lows a little bit, make people a little bit optimistic about the stock market going forward, and then it fell apart again. What do we have going on here this week? Possibly another bear flag, a little bit more exaggerated of a bear flag because the losses have been so steep since then that it's going to make a little bit bigger of a rally, like kind of like if you stretch a rubber band really far and you let go, it's going to snap back really fast. That's kind of what you have in here. You're at. It's a snapback rally. But it kind of looks like a bear flag here too. So there's a good chance that means that there's more downside left in this market. Scary. I know. I don't like it at all. I want to see it go higher, guys. I really do. I don't like seeing the havoc that it's wrecking in society. I don't like any of it. Now let's go through some of these stocks really fast because I want to keep this video as short as possible. Apple, it's clinging to this trend line here. If that bear flag on the S&P 500 does play out, then you have a possibility for a retest of this blue line here. Okay, this trend line that goes way back to 2013. Okay, that happens. Definitely something that I would be interested in playing. Now look at Facebook. Like the S&P 500, a little bit more defined, well-defined bear flag pattern there, very close to confirming to the downside. I think there's another leg in FB coming up. Netflix holding up pretty well. You have a little bit of a resistance level here that it's tapping into, but it's near its recent highs. It's a good-looking chart. Yes, it finished down 1.6% today, but that's far less than what the rest of the market does, and it has shown a lot of resiliency in this market because the more people who are at home, the more people who are self-quarantined, the more people that are Netflix and chilling. Amazon, also one that's shown a little bit of resiliency of late just because of how much more people are becoming dependent on Amazon. However, It's not a clean chart. It's a messy chart. You go back years. I've not liked it for a long time. It looks like a disaster in my opinion. How about Google here? Alphabet, or what they like to call it. Huge line going across here. Major support level. It is holding. That's a very good sign. It tapped it and then it popped right back up here. That's the key level for Google going forward. If that can hold, it becomes a great buying opportunity. If it doesn't, and yes, you do have a bear flag working right here too, just like what we had in Facebook, just like what we had in the S&P 500. If that confirms and breaks down here, it gets a lot uglier. You have support levels possibly down into the 930s. Finally, Tesla. I don't like it. Don't want to trade it right now. There's too many good stocks discounted. Visa, Microsoft, Apple. I don't need to go into Tesla to get a return, and especially one that would be a much more riskier, more volatile trade in a very volatile market. I'll stick to the more dependable stocks, ones that have the less volatility but are still going to surge in this market once the bottom does get put in. But again, you have the bear flag here. Bear flag pattern. I don't like seeing this across multiple stocks, but there you have it. You also have a downtrend still in place. Not as clean as what we've seen in some, like the Nasdaq, but it's still there. It hasn't broken it. Looks like there's more downside to me to come. I think a good chance that we're going to retest this 360, 370 level. Here's what I tell you. I know a lot of you guys, if you have cash on hand or if you have cash on the side or you haven't been in the market in a long time, you're anxious to buy this market sell-off. You're like, man, I want to get into this, okay? This is like the kind of stuff that makes a Warren Buffett out of a person, okay? Wrong. This is the kind of stuff that you think you're getting in low and it just keeps going lower. Stock that goes from 100 down to $10, it's a 90% decline. If you get in at $10 and it goes to $7, well, from 100, it's only a 93% decline. But for you getting in at $10 and it goes down to $7, that's a 30% decline. Those are big numbers there, okay? Your job in this market, first and foremost, preserve capital, okay? Go into a trade, know where you're going to get out of the trade. Always know that. Just as many bag holders are found trying to spot a bottom in the market. You don't want to be a bag holder. You don't want to be a person who just was chasing the dollars, because guess what? When you start chasing the dollars and you start looking at how much money you're making on a given day or on a given trade, that's when you're going to start losing. You're going to start personalizing the gains. You're going to start thinking about what you're going to do with the money when you get rich, and you're going to lose a lot more. Hey, if you like this video, I really appreciate it. If you'd like and subscribe to the channel, trying to build up the audience, I'd really appreciate it. I know these are all tough times for everybody, so I appreciate you guys listening to me each and every week. Thank you guys. God bless.